The following program was paid for by Templar Real Estate. The views and opinions expressed on this program are not necessarily those of the staff and management of WMTR. As always, it is advisable to consult a professional before making a major decision. It's time now for the Templar Real Estate Talk Show. Here's your host for the program, Joseph J. Zoppi.
Hello. Welcome to the Templar Real Estate Talk Show. My name is Joseph J. Zoppi, a real estate investor, consumer advocate, author, and managing partner of Templar Real Estate Enterprises. You could reach us at templarcashforhouses.com. That's TEMPLAR cashforhouses.com. That's one word. Or you could call us at 973-240-8593. Again, that's 973-240-8593, and we could answer any questions you may have, or you could email us from our website, again, for any questions or anything you want discussed on this radio show. This is for first-time listeners. My company is a real estate investment firm. We buy houses for cash. We purchase apartment buildings. We do joint ventures with other real estate investors. We loan money for rehabs and provide transactional and gap funding as well. We work with individuals that want to invest with us in single-family houses up to apartment buildings. We do not speculate. We're very protective of our money and our investors' money. I'm not an agent. We're not a brokerage. But I have individuals on staff that are agents that could sell your house through the traditional multiple listing service. This show is going to go over everything there is about real estate and those things that impact real estate. We'll talk about our rehabs, some of our investments, what went well and what did not go well with our rehabs, and what we learned from them. We'll talk about the economy and interest rates. We'll discuss trends in the real estate market. Real estate is one of your biggest investments, so it's important you know as much as possible about it. I will provide you with my opinion. It's only my opinion. I say every week about that, and I always try to make sure that everyone realizes that, you might have great experiences with a contractor or a person that's providing services, but really when the rubber meets the road, we'll say, or is when there is a problem, and how they rise above the occasion or don't rise above the occasion. It's very easy when everything's going well, but it's really when there is a problem. And unfortunately sometimes a individual provides a service and it's good because everything went well, but you really don't know if there is a challenge, what they're going to do and how they're going to rise to the occasion. So that's extremely important. The other thing is about individuals that give references. Make sure you ask lots of questions, especially if it's your friend. You want that person to always be your friend. So you got to ask lots of questions. Your responsibility to really peel back the onion on that and learn that. And that's probably the biggest thing. When we do things, we make sure that we push through and we won't give up. Case in point, if someone's having a problem with their title, we will work with them on it. We've had individuals where there's liens on titles. Are very hard to sometimes negotiate to drive it down so the individual get more money, but we do those types of things. If it's a medical lien, the IRS liens are really, really difficult to really drive down. I've heard people do that. I don't know if it's just smoke and mirrors on that, but on other types of liens, excluding like a primary bank lien, there's always that ability, for the most part, to renegotiate. So that's very, very important. We work with sellers on that, and we're very good at doing that. So, if that's ever a situation, really, please give us a call, and we could help you on that. But again, if there's problems, what really distinguishes a good company from a bad company is rising to the occasion. I'd like to do a shout out to some of our listeners, Paulette, the crossing guard from Livingston, and Timmy from Cedar Grove, as well as a couple other individuals that are new. One is Maria and her sister, Anita. So I'd like to do a shout out to them. Also, we buy houses. That's one of our core businesses is buying houses. So, we buy houses in New Jersey. We're starting to expand to New York, and I guess that's a good thing, except there's additional challenges associated with that. But we buy houses in Newark, we buy houses in Jersey City, we buy houses in New Milford, New Jersey. We go, Central Jersey, so we buy houses in Somerset, Somerville, and obviously further south, especially along the coast. We buy houses in Long Branch, and we buy houses in Brick. So we buy throughout the state. We'll buy houses in Sussex County as well as Ewing County, which is down near Trenton. So we really cover New Jersey completely. So if you're looking for a cash buyer, please give us a call at Templar. We will buy your property and we'll buy it as is. So it's very, very important. We're not going to change that after we put you under contract. We will not do that. You have individuals that will. They'll all of a sudden, say, well, I didn't know this was a problem with the outlets or the electrical. We don't do any of that. So let's be clear to that. The only time we'll have a discussion if there's major structural issues, major, not minor. So for us, major is really big structural issues, but normally we'll catch those. I'll catch it, or one of my team members will catch it, and we'll discuss that. The other one is environmental issues like oil tanks that are leaking. We always put a caveat on that because you never know if it's going to hit groundwater or anything like that. So that's always an issue. That could be an issue. We're working through still. It's been like months with one individual that has multiple properties selling us, and 2 oil tanks, one on one property, one on another property, are both leaking, and we're about to clean those up hopefully and move forward with the acquisition. So I've brought up for the last few weeks about mortgage forbearance. It's ending, so please give us a call if you're in forbearance, and as a result of it, you're going to have to start paying, and you're going to have a lot of fees associated with that. I would just find out what your payout is, how many penalties and fees that you have associated with it since you've been on forbearance. Please give us a call. We'll be more than happy to help you out. Again, loan mods are fine, but you're kind of kicking the can down the road. We all sometimes do things like that, but I would really recommend that you look at it really closely. You could give us a call. We'll be more than happy to help you. We're not going to charge you. So that's kind of important. You could also refinance, but if you were in forbearance, the likelihood that you're going to be able to refi is going to be difficult, to say the least. Again, banks are there to, I would not be thinking that the bank is your friend under no circumstances. It's really that simple. If they see that your property has a lot of equity, they're going to be salivating for it. I hate to say it, but that's what it is. And I've talked to so many people, and they've all been in that situation. And certain banks, they do really unscrupulous things. I'm not going to name names, but they do unscrupulous things, no matter it's a small bank or a big bank. So please be careful, be wary, and speak to an attorney, or give us a call. We'll point you in the right direction as well. A couple other things I'm going to talk about. One is passive investing. Right now, the stock market's still doing really well. It's pulled back a little bit. It's down a few percent over you know over some of its highs, but um, I have individuals that have been coming to us as of lately, especially because they're concerned about the stock market and where it is and how much further it could go up, as opposed to where it could go, coming down. And the biggest thing right now is not so much where the stock market is, but I feel it's those things that could impact it as a result of increase in interest rates, tightening in terms of the Fed, those types of things. And as a result of it, with the less money supply and interest rates increasing, there's going to be a pull on growth. And, individuals are going to get, concerned about it. And one of the biggest driving factors of anything, whether it's in a bear market or a bull market, is really individuals, the market sentiment, and how they feel and how the market feels about it. And if you have individuals that are worried about where the market's going, what the outlook is for employment, what the outlook is for businesses holistically, all of a sudden you're going to start getting repercussions as a result of that. It's that simple. And when you start to turn off the faucet of money and free money and money flowing easily, people start worrying. It's a fact. So I'm concerned. I wouldn't say I wasn't. And I've been talking to a lot of people. They're concerned as well, and you all should be. We don't know where the market's going. We don't know about the inflation. The Fed's still saying it's transitory, but then you're getting these undertones of other individuals saying, well, maybe it's not. I don't think it's transitory. I think we might be in for a long haul. And I've brought that up before in terms of really where employment is and where there's there's a need for skilled individuals, and companies are having a lot of problems bringing on people. And one of the things is, for myself as a company, and when I was working in corporate America, was hiring the right individual. Because when you hire the wrong individual, the time and cost that's associated with it is just, it's unbelievable. You bring someone on, you train them, and then it doesn't work out. Well, you've put resources on for training. They haven't been efficient because they have to train the individual. And as a result of it, all of a sudden that person leaves, or you got to cut that person loose. All of a sudden all that work is gone down the drain. And I was always very careful when we were hiring people. And anytime I hired someone too quickly, I paid for it in the end. It's just that simple. And you have these companies that might hire someone and they might just leave because they don't like it. And they, all that training and everything associated with it has gone down the tubes. So that's a big concern of any individual that has a business and bringing on new talent. That's the way it is. Well, I want to talk more in my next segment about passive investing, as well as some other things that are coming up. So I'm going to have to close out this segment. Again, if If you want to reach us, you call us at 973-240-8593 or TemplarCashForHouses.com. Thank you very much.
Life can be a roller coaster, and sometimes you need to sell your house fast. That's why there's TemplarBuysHouses.com. Maybe you're downsizing, getting a divorce, having health or financial issues. If so, head to TemplarBuysHouses.com. TEMPLAR BuysHouses.com. TemplarBuysHouses.com will buy your house quickly and without hassle. If you've inherited a house that is vacant, contact TemplarBuysHouses.com. Dealing with them is easy and quick. No high-pressure sales tactics, and you won't have to fix up the house. They will buy your house as is. You pick the closing date and when you move out. No commissions and no hassles. Contact TemplarBuysHouses.com. TEMPLAR BuysHouses.com with an A+ rating from the Better Business Bureau. Call 973-315-7990. That's 973-315-7990.
Be sure to listen to the podcast of the Templar Real Estate Talk Show. Find it now at TemplarBuysHouses.com.
Hello, welcome back to the Templar Real Estate Talk Show. My name is Joseph J. Zoppi, Managing Partner of Templar Real Estate Enterprises. You could reach us at 973-240-8593 or TemplarCashForHouses.com. Again, if you need to sell your house fast, please give us a call. Even if you don't need to sell your house fast, please give us a call. We could always list it on the multiple listing service with one of our Rockstar agents. So that's very important. We also do lots of investing. I'm looking for apartment buildings, preferably 100 plus units. It does not have to be in New Jersey, preferably not in New Jersey. So please give me a call on that. I'd be more than interested to take a look at it with myself and have some of my private investors as well. A couple of things. I've been talking about private investing a lot lately, and we've always had individuals that want to invest in our company and our deals, but I also always want to make sure that if an individual is investing with another investor, that they understand and able to look at certain things from a deal perspective to ensure that it's a sound deal, or fairly sound, we'll say. Okay, sometimes you could never be 100% sure, but it's very, very important. It's very important to us as consumer advocates that individuals know that and they're able to discern certain things. When we do this, we do it based on just, from a charitable perspective. We do not charge any money. It's that simple. And you could always contact us and call us, or you can fill out a form. It's www.investwithtemplar.com. It's one word, investwithtemplar.com. And you can fill out the form. It's a simple form, name, email address, phone number, and we'll get in touch with you. So, a couple of things with investing in real estate. Now, a lot of individuals don't have just cash in their savings account. Sometimes it's invested in something else, but sometimes they want to take it out of, maybe a current asset that they have, like stocks. They also have possibly certain money in IRAs, things like that. And you could use any of those means to invest in real estate. And that's very important to know. It's just not money that you have in your bank account. Obviously, if you have stock, you're going to have to sell the stock. That's a fact. But there's a couple of things that you could do to invest in real estate using an IRA. One of them is it's a self-directed IRA. And what it is basically a means by which you could invest in a lot of different types of investments. Now, traditionally, when you're at a brokerage, you invest in what they have, some mutual funds, as well as stocks. But there is other ways. And if you ask, well, can I invest in, we'll say, real estate, they're going to say, no, that's not possible. Well, it is possible. And it's called we'll say a self-directed IRA. And it was established by the government in 1974, and it's a way of investing in alternative assets, and it's permitted by the IRS. So, IRS publication 590, it's 590, provides a list of investments that are prohibited and other investment types that are permissible by the IRS. So, what's not permitted? First of all, artwork's not permitted to invest in. Rugs, antiques, certain metals, gems, stamps, coins, alcoholic beverages, and life insurance policies. So I guess like alcoholic beverages like wine, there's sometimes people invest in wine, and it will appreciate over time, but I guess the IRS doesn't like that. So those are the ones that are not allowed. Now with metals, there's certain areas where the IRS will let you invest in, and it's certain types of U.S. gold coins and certain things minted by the Treasury. So it's a combination of metals and coins that are not allowed, but under certain circumstances they are allowed, and also certain types of silver, palladium, and platinum bullion is permissible. But again, that's on certain things. Okay, so let me be clear on that, and I don't have all the answers when it comes to that. But on the flip side, what's important is a self-directed IRA. You can invest in a lot of different things, which are pretty interesting. So obviously, residential real estate and commercial real estate, undeveloped or raw land, real estate notes. That's basically like a loan, where we'll say that we have a note on another property or a loan against another property. You can invest in that. Promissory notes. You can invest in companies like LLCs and C Corps, so you can invest in that. Tax lien certificates, equipment leasing, livestock, which I guess that's to push in terms of to help with farmers and things like that. Foreign currencies, stocks, bonds, and mutual funds. So you could also invest in stocks and bonds and mutual funds, just like if you were at a regular brokerage. Structured settlements, those are settlements or agreements where over a period of time, someone will be paid a certain amount of money. Case in point, lottery. Someone's going to get paid over the next 30 years X amount of dollars. Some precious metals, cryptocurrency, of course, accounts receivable, and oil and gas. So those are the areas where you can invest in. Now, a lot of times you say, I haven't even heard of a self-directed IRA, and it's more and more popular now, but that's been over time. And the real estate arena has really pushed really hard to make that a lot more known to people, because it's been around since 1974, but a number of people do not know about it. And especially because you're dealing with a brokerage, and they'll say no, there's no other things that you can invest in, but that's not the case. Now, besides a traditional or a Roth IRA, there's different additional qualified retirement accounts that you can use. One is a SEP, which is a simplified employee plan. Also, a savings investment match plan for employees. Solo 401k and health savings account, as well as a Coverdell Educational Savings Account, CESA, it goes by. So you could use these different types of accounts and put it into a self-directed IRA, and then you could look for an investment. So it's pretty straightforward. Okay. Now there's certain rules, there's a bunch of rules associated with that, and who you can invest in and who you can't. So there's certain ones that are called disqualified individuals you cannot invest in. And it consists of yourself, so you can't invest that IRA in a property or a company that you own, or your spouse, or your parents, grandparents, great-grandparents, children and their spouse, grandchildren and great-grandchildren and their spouses. So it's basically, it's stated as disqualified persons include you as the account holder and your ascendants and descendants. So what's an ascendant? It's those people that are in a family tree above you. And those are, like I said, your grandparents, your parents, your great-grandparents. Those are the ascendants. The descendants would be your children, your grandchildren, your great-grandchildren. So it's all along that family line. Now, of course, you could invest in your uncle's, whatever it may be, a company, real estate, so on and so forth, or a friend. You could do that. But you can't do it within that one family line, the ascendants and descendants. Again, all this, the other thing you can't invest in is if it's your attorney, your CPA, or your financial advisor. So you can't do that as well. But with that being said, you always got to talk to a CPA on any of these rules, so or an attorney. So I always make sure you do that. That's one thing that's very, very important. So you can't just, I'm not giving legal advice here or financial advice, but just some statements for you to look into. So that's different ways in terms of if you have money locked up, you could invest in real estate. And we have a number of different companies that we could recommend if you ever need to do that for an investment, whether it's, again, for real estate or something else. And they'll explain all the details associated with it. It takes a few days, less than a week, to move it over from one IRA to the self-directed IRA. And there's custodians that do this, and they manage or cover and take care of that money and put it in their accounts, basically, and you draw on it. So it's pretty straightforward, it's easy, and it's being done all the time. But again, please give us a call if you know something about some individual. You say, Joe, I want to invest in real estate and I have this deal. Now, I'm not going to tell you per se if it's a good deal or not, but I'm going to tell you certain things that you got to look out for, and depending on your risk tolerance, you're going to have to say, well, I like it or not. Okay. Also, as I always say, you can't, I could only tell you so much. It's also based on the individual. So they might have a great deal, but if they're not good at managing things in terms of rehabs or anything else, then you might not, it might be more difficult to make money, or possibly you could lose money. So you have to bet on the right horse, as they say. But it's very important that, that's probably one of the most important things is the individual, not only the deal. It's like 50-50 really. Because you can have a great deal, but if you have someone that's really not good, it really doesn't matter. That reminds me of a quick story, and I'm going to have to close out. So I have a good friend of mine. We went out to dinner last week, and great guy. He's an investor. Know him a long time. Very generous guy. And one of his guys that works for him said, I always want to have one day a multifamily property to give to my son, so he could get the cash flow associated with that. He says, okay. And he always works for him, fixing his houses and everything else. And he said to him, he says, this is what you do. For this one house, you collect the rent, you give me X, you keep the rest. And you manage it all. And then after that, we'll decide on a price for you could purchase it out in the future. So you save your money and you could purchase it in the future. And he was going to give him a very reasonable purchase price, because I know him well. So I was talking to him, and he said, oh man, Joe, what a mess. He says, everyone's pissed off at him. They're not paying rent. It's just such a mess. He says, I gave it to him, and he was being thick-headed. If someone missed the day's rent and they didn't pay, he was all over them. Then they were getting pissed off, and they're not paying now. He says, I got to fix it all. He says, it's just a complete mess. I gave him this option, and he made a total mess of it. So I said, yeah. He says, that's just the way it is. It depends on the horse you're betting on. And that's the problem. So I got to close out, unfortunately. I want to talk about this some more. I'll do it next week. But you could reach us at 973-240-8593 or TemplarCashForHouses.com. Again, have you and your family take care. God bless, and we'll talk next week.
Life can be a roller coaster, and sometimes you need to sell your house fast. That's why there's TemplarBuysHouses.com. Maybe you're downsizing, getting a divorce, having health or financial issues. If so, head to TemplarBuysHouses.com. TEMPLAR BuysHouses.com. TemplarBuysHouses.com will buy your house quickly and without hassle. If you've inherited a house that is vacant, contact TemplarBuysHouses.com. Dealing with them is easy and quick. No high-pressure sales tactics, and you won't have to fix up the house. They will buy your house as is. You pick the closing date and when you move out. No commissions and no hassles. Contact TemplarBuysHouses.com. TEMPLAR BuysHouses.com. With an A+ rating from the Better Business Bureau. Call 973-315-7990. That's 973-315-7990.
Be sure to listen to the podcast of the Templar Real Estate Talk Show. Find it now at TemplarBuysHouses.com.
The preceding program was paid for by Templar Real Estate. The views and opinions expressed are not necessarily those of the staff and management of WMTR. As always, it is advisable to consult a professional